Hello dear students, I am Shobha Chugh, PGT Commerce from Kendriya Vidyalaya Sangathan. Welcome to the class. I hope you have gone through the first session of this chapter, that is Business Services. Now we are here heading towards the second session of above said chapter, that is Business Services. Topics that will be covered in today's session are insurance meaning, principles of insurance, insurance types that are life, health, fire and marine insurance. Concept of these insurance types will be taken. Then next is postal service, meaning of mail, registered post, parcel, speed post, courier, etc. After this session, all of you will be able to recall the concept of insurance. You will be able to understand utmost good faith, insurable interest, indemnity, contribution, doctrine of subrogation and causa proxima as principles of insurance. You will be able to understand the utility of different telecom services. Dear students, in this chapter, Business Services Part 1, you all have studied about the business services, meaning and types, banking, different types of bank accounts, banking services with particular reference to bank draft, bank overdraft, cash credit, etc. E-banking, meaning, types of digital payments, etc. But now, in today's class, we will continue with insurance and postal services. Now, let us move to our first topic of this session, that is meaning of insurance. Insurance is a contract or agreement under which insurer agrees in return for a consideration to pay an agreed amount of money to insured to make a loss, damage or injury to something of value in which the insured has a pecuniary interest as a result of some uncertain event. Now, we will discuss about some important terms of insurance that are as follows. Number 1 is policy. When the agreement or contract of insurance is put in writing, that is known as policy. Second is insurer, the firm which insures the risk of loss is known as insurer or assurance underwriter. Third point is insured, the person whose risk is insured is called insured. Fourth one is premium, a periodical payment paid by an individual or an organization paid for an insurance policy is known as premium. Now, let us discuss functions of insurance. First function is provides certainty. Insurance provides certainty of payment for the risk of loss. There are uncertainties of happenings of time and amount of loss. Insurance removes these uncertainties and the assured receives payment of loss. The insurer charges premium for providing the certainty. Second one is protects from chance of loss. The second main function of insurance is to provide protection from probable chances of loss. Insurance cannot stop the happening of a risk or event, but can compensate for losses arising out of it. Third point is helps in risk sharing. On the happening of a risk event, the loss is shared by all the persons exposed to it. The share is obtained from every insured member by way of premiums. Fourth point is assist in capital formation. The accumulated fund of the insurer received by way of premium payments made by the insured are invested in various income generated schemes. Students, now the next topic is principles of insurance. Dear students, there are 7 principles of insurance. First principle is principle of utmost good faith. Second principle is principle of insurable interest. Third one is principle of indemnity. Fourth is principle of contribution. Fifth is principle of subrogation. Sixth is principle of causa proxima. And the last one is principle of mitigation. Dear students, now it is the time to discuss these principles one by one. First is principle of utmost good faith. A contract of insurance is a contract found on utmost good faith. Both the insurer and the insured must show good faith towards each other in regard to the contract. Both the parties should act honestly. It is the duty of the insured to voluntarily make full and accurate disclosure of all facts, materials to the risk being proposed, and the insurer to make clear all the terms and conditions in the insurance contract. Failure to make disclosure of material facts by the insured makes the contract of insurance voidable at the discretion of insurer. Dear students, the next principle is principle of insurable interest. Insurable interest means some pecuniary interest in the subject matter of the insurance contract. The insured must have an interest in the preservation of the things or life insured so that he or she will suffer financially on the happening of the event against which he or she is insured. Because fundamental fact of this principle is that it is not the house, ship, machinery, potential liability of life that is insured, but it is the pecuniary interest of the insured in them which is insured. Third principle is principle of indemnity. All insurance contracts of fire and marine insurance are contracts of indemnity. According to this principle, insurance is not a profit making contract. Insurer will compensate only that much amount to insured for which he had suffered as loss. In other words, the insurer undertakes to compensate the insured for the loss caused to him or her due to damage or destruction of property insured. The compensation payable and the loss suffered are to be measured in the terms of money. The principle of indemnity is not applicable to life insurance. This is the main point to remember. The next principle is principle of contribution. As per this principle, it is the right of an insurer to call upon other liable insurers to contribute for the loss of payment. It means that in case of double insurance, the insurers are to share the losses in proportion to the amount assured by each of them. In case of loss, when there is more than one policy on the same property, the insured will have no right to recover more than the full amount of his actual loss. If the full amount is recovered from one insurer, then there will be no right to obtain further payment from the other insurer. Principle of subrogation. Once the insured get compensated for the loss or damage to the property insured by him or her, the right of ownership of such property passes on to the insurer. So, principle of subrogation refers to the right of the insurer to stand in place of the insured after settlement of a claim, as far as the right of insured in respect of recovery from an alternative source is involved. Principle of causa proxima. As per this principle, An insurance policy is framed to provide compensation only for such losses as are caused by the perils which are stated in the policy. When the loss is the result of two or more causes, the proximate cause means the direct and the most dominant and the most effective cause of which the loss is the natural consequence. In case of loss arising out of any mishap, the most proximate cause of the mishap should be taken into consideration. The last principle is principle of mitigation. As per this principle, it is the duty of the insured to take reasonable steps to minimize the loss or damage to the insured property. If reasonable care is not taken, then the insurance company may deny to pay the claim. Dear learners, the next topic is types of insurance. These are life insurance, second is fire insurance, third one is marine insurance. First is life insurance. Because life itself is uncertain, all individuals try to assure themselves for a certain sum of money in the future to take care of unforeseen circumstances. Even individuals in the course of their life are always exposed to some kind of risk. So, life insurance is a device to provide some financial support to individual or family members in both the cases that are too short life or too long life. Life insurance may be defined as a contract in which the insurer, in consideration of a certain premium, either in a lump sum or by other periodical payments, agrees to pay to the assured or to the person for whose benefit the policy is taken the assured sum of money on the happening of a specified event contingent on the human life or at the expiry of certain period. Now, the second point is fire insurance. Fire insurance is a contract whereby the insurer, in consideration of the premium paid, undertakes to make good any loss or damage caused by fire during a specified period up to the amount specified in the policy. Normally, the fire insurance policy is for a period of 1 year, after which it is to be renewed from time to time. The premium may be paid either in lump sum or in installments. A claim for loss by fire must satisfy the two following conditions. One is there must be actual loss. Second is the fire must be accidental and non-intentional. The next is marine insurance. A marine insurance is device wherein the insurer undertakes to compensate the owner of a ship or cargo for complete or partial loss at sea. Marine insurance provides protection against loss by marine perils or perils of the sea. Marine perils are collision of ship with the rock or ship attacked by the enemies, fire and captured by pirates, and actions of the captains and crew of the ship. These perils cause damage, destruction of disappearance of the ship and cargo and non-payment of freight. So, marine insurance insures ship, hull, cargo and freight. Now, come on to the next topic, that is Postal Services. Indian Post and Telegraph Department provides various postal services across India. For providing these services, the whole country has been divided into 22 postal circles. These circles manage the day-to-day functioning of the various head post offices, sub-post offices and branch post offices through their regional and divisional level arrangements. Some of the postal services are as follows. First is mail. The mail services offered by post offices includes transmission of message through postcards, inland letters, envelopes, etc. Second one is registered post. Sometimes we want to ensure that our mail is definitely delivered to the addressee. Otherwise, it should come back to us. In such situations, the post office offers registered post facilities, which serves as a proof that mail has been posted. Third is parcel. Transmission of articles from one place to another in the form of parcels is known as parcel post. Postal charges vary according to the weight of the parcels. Third is speed post. It allows speedy transmission of articles within 24 hours to people in specified cities. Fourth is courier services. Letters, documents, parcels, etc. can be sent through the courier services. It being a private service, the employees work with more responsibility. That was the topic for today's session. I hope you all have understood it well. Before ending the session, let us have a quick recap of what we have learned today. We have learned about insurance and postal services, their meaning, types and principles of insurance. Now, it is the time to get ready for assignment. Open your notebook and write the question. Read the hypothetical text given and answer the following questions. Manish, Rahul and Madhav live in the same locality. They used to meet and discuss their ideas. After discussing the recent fire breakout in their area, they decided to take fire insurance for their house or work area. Manish gets his house insured against fire for rupees 1 lakh, and during the policy period, his house gets damaged due to fire and the actual loss amounts to rupees 2.5 lakh. The insurance company acquired the burning material and approved his claim. Rahul gets his godown insured against fire for rupees 1 lakh, but doesn't take enough precautions to minimize the chances of fire, like installing fire extinguishers in the factory. During the policy, a fire takes place in his godown and he doesn't take any preventive steps like throwing water and calling the employees from the firefighting department to control the fire. He suffered a loss of rupees 1,20,000. Madhav took a fire insurance policy of rupees 20 lakh for his factory at an annual payment of rupees 24,000. In order to reduce the annual premium, he didn't disclose that highly explosive chemicals are being manufactured in his factory. Due to a fire, his factory gets severely damaged. The insurance company refused to make payment for the claim as it became aware of the highly explosive chemicals. Now, answer these questions that are based on given information. Question number 1 is, how much can Manish claim from the insurance company? Your options are A 2.5 lakh, B 1 lakh, C 2 lakh and D is none of the above. Now, the second question is, how much compensation can Rahul get from the insurance company? A is rupees 2 lakh, B is rupees 1,20,000, C is rupees 1 lakh and D is nil. Question third is, which principle is violated in the case of Rahul? A is mitigation, B is insurable interest, C is utmost good faith and D is indemnity. Now, the question 4 is, how much amount is the insurance company liable to pay to Madhav if he files a case against it? A rupees 24,000, B nil, C insufficient information, D 20 lakh. Question number 5 is, which principle of insurance is violated by Madhav? Option A is utmost good faith, option B is insurable interest, option C is subrogation and option D is proximate cause. The last question is, the insurance company acquired the burnt material and approved his claim. Which principle of insurance is highlighted in the given statement? A is mitigation, B is indemnity, C is proximate cause and the D is subrogation. I hope all of you have completed your assignment. Now it's the time to tell your answers. Answers are, for the question number 1, right option is B, that is rupees 1 lakh. Question number 2, the right option is D, that is nil. Question number 3, option A is correct, that is mitigation. Question 4, option B is correct, that is nil. For question 5, answer is A, utmost good faith. And the question 6, answer is D, subrogation. With this, we have now come to the end of this session. Hope you have enjoyed it. Revise all that is done till now. Thank you very much. Happy learning. Be safe, be healthy and stay tuned for more information.